Let's get it. Today we're talking taking profits crypto cabin style part 2. Let's go. What is up everybody and welcome to the Crypto Cabin. My name is Tom and in today's video we're going to be talking about a couple different tools that I've used for taking profits and a couple tools that I think could help you out as well. If you're new to the channel, please scroll on down, hit that subscribe button, leave this video a thumbs up and then hit the notification bell and select all so you get notified for when I post these new videos. So let's get right into it. Last video I talked about Fib extensions and also the Bitcoin Fear and Greed Index. Today we're going to talk about the RSI, Stochastic RSI, some Fib retracement levels as well, and then also looking at Heikin Ashi candles and how they can help you, and also flipping to log scale. So there's a bunch of different things that can help you out here. Let's start off with RSI. So typically when we look at this metric here, we'll see that when we get above a 70, we are in overbought territory, which means that the price is more than likely to come down. And if we enter below the 30 range down here, price is oversold and is more than likely to come up. So this is on the weekly time frame for Bitcoin. And there's also kind of a support and resistance line for Bitcoin right at around 42-ish on the weekly. So whenever Bitcoin comes below that 40 level, typically we are in a pretty good opportunity to buy. And then obviously you can see up here, whenever we get above 70, that would be typically a better time to sell. So that's on the weekly. When we look at the daily, it's a little bit different. The RSI will fluctuate more on shorter time frames. It'll go through bigger swings on shorter time frames. So looking at the bigger time frames, like the weekly, is usually a really good time, especially if you're not somebody who's day trading or looking at the markets every single day. But you want to check in, maybe do a quick check, just take a look and see where the RSI is. And typically if we're below, like I said, that 40 to 30 on the weekly, that is typically a very good time to buy, for Bitcoin at least. And then when we get above 70, that is typically a good time to sell. And that's pretty much how that goes for RSI for most assets out there. When we get above 70, typically good time to sell. Below 30, typically good time to buy. On the daily, you will see here that we do come below this 40 level. We spend a little more time below, obviously, on the daily. So then we also have lower numbers here, right? On the weekly, we never really come below 30 very often, but as you can see here on the daily, we do come below 30 a few times, and this is definitely a good time to buy. It doesn't happen very often, and so when we get that opportunity, that would be a good time to scoop some up. And then again, same thing, taking profits when we get above this 70 range, really good time typically to be taking profits. So let's take a look at an example here. So if you were to have, let's say obviously the C dump is an exception, but let's take a look back a little further. Okay, so this is actually back in 2016, but here we had a dip down below that 30 level. On the RSI, we were actually down at about 26. This is on the daily chart again. So that price was right about $354 for Bitcoin. If you would have waited until we got up to above 70 RSI, you would have made, where is it, right about there? That's about a 31% gain on that trade. If you would have held it, or that's when I would have sold anyway, is when we got up above that 70 mark. And then, like I said, on the daily chart, or on the weekly chart even, when we come back down to around 40, or if we ever get below this 42-ish level, that's usually another good time to potentially buy Bitcoin. So we got down right there. The RSI was down at below a 40 there, right at around $433. And then if you were to sell when we got all the way up into this zone, up here, that right there would be another 77, 78% pump. So it can stay up above this 70 for an extended period of time. So it's not like as soon as it goes above 70 that you need to sell. But even if it did, even if you did, most of the time you are going to be in profits. So what I personally like to do is I will try to buy down here on the daily anyway. But if it gets below 40, then I usually know it's a decent time to buy. I will let it come up. If it gets above 70%, you can sell a little bit, but obviously not all of it, and then, potentially it could keep going up, right? With this asset specifically, it can run for a long period of time after we get above that 70. I think the highest we ever got was back in 2013, and it's gotten up to, I think, like 99 on the daily chart, which is pretty insane. Or 97 right here was the peak back in 2013. We got up to about 97 on the RSI. So that is, on a scale of 1 to 100 anyway, or 0 to 100, that is very, very high. So it can go up way past 70, but just typically those are the levels to watch on the RSI. Obviously, it happens more often going lower on the daily and more often going higher on the daily versus the weekly. The second thing you can look at, especially I've found anyway for shorter time frames, is the stochastic RSI. So this one ranges up and down quite a bit more, but typically this is on a shorter time frame now, so we're looking more at like the 4 hourly, but you could also do this for the daily. But typically, again, very similar, but these numbers are 20 at the bottom and 80 at the top. So when we get down below this 20 mark, you can see here we were down below there, and then we ran up. So if we take a look at what the price was doing over here, if you would have bought down in this phase, you could have bought at around, whatever that is, around 62, and then it ran up to a $66,000 Bitcoin at that point in time. And again, you would have bought down here, sold up there. That's a quick 6.5% gain, and this actually works on the majority of them. This one's not the best example, but still, you could have, you would have, got in down here when it was below that 20 level, like it's pretty close to bottomed out there, and then got up here, had another 3 to 4% gain before we got near the top. But if you set your stop losses correctly, then you'd be in profit anyway, and you would lock in profits on that trade there as well. So this is more the stochastic RSI I personally use for more of shorter term time frames, like with this 4 hour, and then typically I would try to buy when we are down low and sell when we are up top. So for my most recent one, I did end up getting in kind of when we were down here. So right at around $47,000-ish, I think, and we are still going, and we've had a almost 7% gain so far. I have set my stop loss, so in profits, so that is kind of how I've been playing these shorter term time frames, especially on the 4 hour. I find that this works quite well. Okay, that was RSI, and it still works for a lot of other assets as well, obviously, but let's talk about a little different strategy here. So I'm going to talk about just simply by switching to log scale to show you how it becomes easier to use those Fibonacci extensions like I talked about last video. So if we hit the log button here, you'll see my chart changes quite a bit. And then I like to switch to, usually it's maybe a little easier on the weekly. It obviously depends on how long the asset has been around for. So this makes it way easier to tell where the impulse move up started, where the retracement was, and then that helps you to draw these Fibonacci extensions. So again, it's over here, trend-based Fib extensions, and then we click where we want this trend to start, or where it did start, pull it up to the top, and then pull it down to the retracement, and we click again. And when we drag it over, we see that we hit these numbers very, very nicely with Solana here in particular. So again, that's where I'm getting a lot of these numbers for in regards to where to take profits. So that is just a little trick with switching to the log scale. So let's take a look at another trick here that you can use. So sometimes it's easy to see the impulse moves up and the impulse moves down, but simply by switching to log. But another way that you can do this is actually by switching to candles called Heikin Ashi candles. So once we switch to these Heikin Ashi candles, you can see that we have a very clear impulse move up, the very clear retracement, and then that helps us to draw out our Fib extensions. So click at the bottom again, pull it to the top, and then drag it to the bottom, and we have, again, some very good levels that were hit there, the 2.618 and the 3.618. So those would have been some levels that I did set for Phantom on my personal take profit page over here. Those are those levels, and so now I've set the next levels. The green numbers over here, the green highlight, means that these projects have hit some of their targets already. And now, if we're taking a look at how I set the next level for taking profits, where it could potentially go, take it from the bottom again, draw it to the top, and then pull it down. And that is where I got the next levels from for Phantom in particular. So there's a couple cool tricks there just with charting and switching up either if you're on log scale or auto, and then also changing up what type of candles you were looking at, which helps give you these very clear trends up and trends down, and that's going to help you use that Fib extension tool. Next, let's talk about Fib Retracements. So this can help you determine, again, it can help you set some certain target levels for prices to take profits, as well as where to potentially buy based off of certain support levels. So this is a Fibonacci retracement tool that I drew here for Bitcoin from the high to the low. And so now these are some numbers that also line up with very similarly to where the Fib extension is that I drew out my most recent ones. So this is kind of where I'm getting some of the ranges from, right? So 1.618 for these two is between 86 and 89. And then we got the 2.618 between 120 or 118 and 121. And then the last couple bull runs, the 2.72 on the Fib retracement tool is what's been hit before. So that's sitting at 109,000. So how you draw this is, I'll just get rid of this one for you and then I'll show you. So again, it's over here. Fib retracement, we come to the top, right where we peaked out, and then we pull it, or we click at the top, and then we pull it down to the very bottom of the retracement there. So once again, these numbers shifted slightly just depending on exactly where I click, especially on a log scale. So those are the numbers that you get from just pulling it from the top to the bottom for potentially some extensions on the way up. You can also switch this, since we are on log scale, you can hit the settings and then scroll down and click Fib levels based on log scale, and then obviously we get some very different numbers. But here again, check that out, the 2.72 and the 2.618, that is a range that usually gets hit in the extended bull cycle. But again, we need to take a look at a lot of these different numbers and different lines that people are going to be looking at, because they just look at charts and levels and take a bias or emotion right out of it. So that's one way to do it with the Fib retracement, switching to log as well, and combining that with the Fib extensions as well as RSI, Stochastic RSI, and all the other stuff that we've talked about before. If we wanted to look for potential retracement levels and potentially where to get in, there you would pull it the exact opposite. So from the bottom to the top of where we went, and then drag it across. So for this particular retracement that we're going through right now, or hopefully we're done with, but the 0.5 was hit there at around 44. So this level, or these levels, sometimes the 0.786 gets hit, or the 0.618 usually gets very close as well. This would be a deep retracement to the 0.786, but usually the 0.618 gets close between the 0.5 and the 0.618 for sure. Those are numbers that you usually need to watch out for. You can see once again on this most recent big impulse from September of 2020 all the way up to the top again. When we came across here, we were right at the 0.382 fib, or that was very close to the bottom. We never actually closed below it. So again, these are numbers that people are watching out for, and this is why they may say if we don't hold 31.5, we're potentially dropping down all the way to 25. So there you have it, team. There are a couple different numbers for you to watch for both taking profits and potentially buying in when it dips down. Go ahead and watch these last two videos a couple different times to try to understand a little more, or watch other people's videos on this. They'll explain it slightly differently than I have, I am sure. But more or less, those are some of the numbers that I anyways use to watch for taking profits, and also for buying up when the number drops. Thank you so much for watching, and if you haven't done so already and got some value out of this video, please scroll on down, leave a thumbs up, hit that subscribe button, then click the bell notification and select all so you get notified when I post these new videos. I appreciate each and every one of you, and I will see you next time on the next episode from the Crypto Cabin.